Hey, how's it going, Hodls? Today we're going to look at moving averages, how moving averages essentially work, the basics of it. And then we're going to talk about Bitcoin compared to the 50-week moving average. Now, we did talk about the 50-week moving average episodes ago, videos ago, weeks ago. We talked about it when we were in that big kind of valley, that gulf that we went through. Now we're kind of approaching a very similar thing, even at Bitcoin's current price. So we are going to look at it, whether or not Bitcoin is going to get down to the 50-week moving average. Is it a buy at that level? Could it go lower? Is it going to move up? And of course, this is TA Tuesday. So again, we are going to go over the basics of moving averages first, and that is brought to you by Bitbuy. And if you are Canadian and you want to sign up for the safest exchange in Canada, regulatory compliant, go ahead and click on the link in the description below. You support the channel and get $20 free for depositing. Okay, let's get into the video. First, I just want to go over this article here that Deutsche Bank's analyst, Marian Labor, and I'm sorry, I'm butchering it, and I should be better at this because, you know, Canadian and we have the French tang, so maybe we should be able to speak other languages a little bit better, but I guess not. Absolutely not. So sorry to the analyst for butchering his name, but he does say that Bitcoin is here to stay and it is digital gold. And I firmly believe Bitcoin is in fact digital gold. Gold is the analog, the old version of Bitcoin. Bitcoin is kind of that new high-techy stuff. And right now, I get the people that don't understand the correlation between Bitcoin and gold. I truly do. The one easy way to think of this is you can never make more gold. More gold can never be brought into existence other than a supernova, right? A collapsing star making gold out of these incredible reactions. So we can't replicate that, which means we can't make gold. And on the same token, in digital space, we can't make more Bitcoin. We can mine Bitcoin. We can continue to mine the Bitcoin until finally we can't mine any more Bitcoin because Bitcoin is finite, but we can never print more Bitcoin. So if we are in a crisis, some sort of monetary crisis, where say banks have over leveraged themselves, you can't print more Bitcoin. You can't print more gold. You can't print more Bitcoin. And that is basically one reason why a lot of people look at Bitcoin the same as looking at gold. There are still energy costs of pulling gold out of the earth. Same thing with Bitcoin. There are energy costs to mine that Bitcoin from our computers. Now, although this analyst doesn't see Bitcoin as a dependable means of payment, which it has its issues, of course, we have the Lightning Network, and I know the Bitcoin maxis are super hype about Bitcoin being the payment structure of the world. I truly believe that they're dying on the wrong hill, that Bitcoin is going to be the best store of value in the world. But again, we have 89% of Bitcoin's total 21 million supply already in circulation, and then less than 10% of the world's population actually own this asset. So there's simply not enough to go around. I think you can't even give a one whole Bitcoin to every millionaire in the world, let alone every person in the world. So if you look at that, if you have at least maybe like even 0.05 Bitcoin, if you have that much, you probably have more than the general rest of the world. Just as an example of that, if you take the 21 million Bitcoin that will ever be in existence, divide that by the current world population, which we know it's going to be dramatically more when Bitcoin is finally outmined, when we've mined all the Bitcoin. But if we take that number, 0.0027 is approximately how much Bitcoin you could give to every person in the world if everyone had an equitable amount of Bitcoin. So I'd probably say if you're above that number, you're probably doing right. Now, he does go off and say Bitcoin does need regulations, which I actually agree with. And it might sound on this channel that I'm anti-regulation. I'm absolutely not anti-regulation. I'm anti-corruption in these regulatory frameworks, in these settings. So, for example, the SEC, I'm incredibly kind of upset at what the SEC is doing, picking favorites and picking winners within the industry instead of fostering innovation and not looking at clear scams like SafeMoon. Hell, people were even saying that it's a Ponzi.
The answer is SafeMoon. SafeMoon is now in the Dave Portnoy business and vice versa. Why? I don't know fucking why. It could be a Ponzi scheme. I like the word moon because that's where I want to go. Everyone Ponzi, it's early. If it is a Ponzi, get in on the ground floor.
And the SEC and the FTC are completely asleep at the wheel. But I do think for Bitcoin to grow into this new financial system that we're heading into, I do think that we do need regulations. Okay, so welcome back to the Bitbuy screen. Here we're looking at the moving average. So to discuss the moving average, we've talked about this a lot of times throughout the channel. And this is just to kind of give you some context here before we get into the meat and potatoes of what's going on with Bitcoin right now. And consistently, I've said certain things about Bitcoin, about moving averages, and we're going to take a look at that a little bit later on. So make sure that you watch all the way through this video. You do see here the moving average going through. So right now we have this set on the 24-hour chart, and we are looking at the moving average, the 50-day moving average for Bitcoin. Now, each little marker here, right, each candlestick that we have is an interval of time, whatever time that we set it to. So if the chart's set to 15 minutes, if the chart's set to a minute, set to an hour, whatever. When we have an indicator like the 50-day, 50-week, whatever it is, it's all based on what interval we're looking at. So right now we're looking at the daily interval. So obviously it's our 50-day. If we were looking at the weekly interval, we'd be looking at the 50-week moving average. So pretty easy concept to understand. If we wanted to change this moving average, we would just switch it over and type in the length 200. So again, 200 intervals, right? So it doesn't necessarily mean 200 days, just whatever we are set to on the chart. Of course, we're set to 24 hours. So if we set to 200, we now see that we have our Bitcoin 200-day average. Now, again, this would change if we change the interval down to, say, 2 hours, for example. Of course, it's going to look much, much different than what we would look on the daily. So let's go back to the daily here and talk about the 200-day moving average. So moving averages are always lagging indicators. Now, what do I mean by a lagging indicator? It typically means that anything that we understand from that indicator doesn't represent itself until after the event has happened. We talk a lot about golden crosses and death crosses. We've talked about the golden cross on one of these videos before, and those took two moving averages that kind of were able to converge together and make either a golden cross or a death cross. So for this example here, we're obviously going down because Bitcoin has been down below the 200-day for a while. So the average is going to go down. This exact same thing would happen if we were above the 200-day for an extended period of time. The average would go up, but it is always going to be delayed because, again, it's the average price. It's not instantaneous to jump up or down to the downside, depending on the interval. Of course, if we were on the daily, the 1 day moving average, and if we take a look at that here and just switch this down to 1, you'll see exactly what happens. It follows each of the candles, right? So no deviation from the candle because we're just tracking the 1 day or the one interval. But here, if we look at the 200-day, obviously in this case, it's way more gradual because it's more of the average of the last 200 of these candles. That's how the moving average is calculated. Now, I've talked about this as well, and anytime we are above or below a moving average, such as the 200-day, maybe the 200-day is a little bit more important than others. Obviously we'd have way more support at, say, something that the 300-day compared to the 200-day, way more support on the 200-day compared to the 100-day, way more support on the 100-day compared to the 50-day. Here we are below our 200-day moving average. We did fight with it. So here we held some line of support at the 200-day. We held line of supports down here as well once we got back up above the 200-day. But now we have been below it, and we've been below it for 1, 2, 3, 4, 5, 6, 7 candles so far. Obviously, we've been below for a while, and we have pushed up to that 200-day and failed to break above. That means our 200-day is now a line of resistance, and the longer we stay below it, the harder it's going to take to get above it until finally it starts coming down and Bitcoin gets a little bit more bullish. Now, one little aspect that I would like to put in mention in this chart is the volume seems to be going lower and lower and lower, which tells me that things are starting to kind of coil up. Now, we've talked a lot about why Bitcoin is going to be bullish long term. I'm not really worried about what it's going to do here. Of course, right now we're looking pretty bearish with the signal, but we are going to look at the 50-week moving average next. Okay, so now that we learned a little bit more about moving averages, we're going to take a look at the 50-week moving average. Now, we talked about the 50-week numerous times, and we did discuss before, buying at the 50-week has always proven to do well in the long term and in the short term, right? I preached that right around here where we kind of hit that 50-week, where we went down to it, and then we bounced right up. And I said, this is a good buying opportunity for either a short-term trade, which Obviously, if you were short term and you were, even if you leveraged, which I don't really leverage as much anymore. I might in a little bit. But even that little jump was roughly 62%, a huge increase from that $32,000 Bitcoin upwards to that $52,000 Bitcoin. So if you were in that trade and did make that short-term trade, you did well. But again, consistently buying at or below the 50-week moving average is going to pay you back in both long-term gains and short-term gains. We saw that here. We did see where we last went down below the 50-week moving average. And that was when Donald Trump had stood up, said COVID was a thing that we needed to worry about. And then markets just capitulated in fear. Obviously, we didn't stay down there for long, but anyone that did buy in this zone did very well in both the short term and the long term, especially if you bought right down at the bottom of the candle, which obviously not many people do. Hindsight's only 2020. I mean, we can't make every great trade in the world, right? So, but we do see that point here where we did hit about the 50-week moving average. We did bounce above that 50-week moving average. Now, finally, we're coming back to this 50-week. So at this point, what does this all mean? Are we going to retest and are we going to go lower? Well, one big thing, because it's a lagging indicator, our 50-week is now higher because we've spent more time above this 50-week indicator, so it's going to move up, of course. Now, we do have a considerable amount of support at the 50-week moving average. We have been at this price for a while. Now, that doesn't mean that we can't go lower because we have been below this very recently, because we did get our ultimate low at around here, which is about $32,000, which again, going back to that $32,000 Bitcoin, is sure will, if we do break below our 50-week moving average here, it sure will hold as a line of support there, at least for a little bit, at that $30,000 Bitcoin. Could it go lower? A lot of people are talking about, hey, we could get that that $20,000 Bitcoin. I mean, it's always possible. I'm erring on the side of being more bullish, even though maybe the trend is looking a little bit bearish right here. I see us maybe going down below the 50-week for a short period of time if we do, and then obviously picking our way back up. But I do think right now is probably the time, at least big institutions are looking at continuing to dollar cost average into Bitcoin. Again, I'm going to preach this. It is always a good idea to buy Bitcoin or cryptocurrencies at the 50-week moving average, either at or below the 15-week moving average. Now, again, we could go lower if we do break below the 50-week moving average. It for sure looks very bearish. But the last time we broke below the 50-week moving average, it was right here. Now, the last time that we dramatically broke below the 50-week moving average for an extended period of time was after the 2017 bull market. So if you do believe that this was the peak, so if this was the peak and then this is a dead cat, if you believe that, then most likely, if you believe that, we're going below the 50-week moving average for an extended period of time. Of course, I don't believe that. I don't think this was our market peak. I don't think we're going to go below the 50-week moving average for an extended period of time. If we do go below, we could see something similar to this dip, maybe not as exaggerated, because I don't think the same amount of fear exists in the market, considering we're more on the upwards end of the recovery from the virus. Maybe our supply chain is looking a little shaky. Maybe the economy is looking a little shaky, but we don't have this uncertainty, which is the big thing that scared us back in March, was the uncertainty of COVID. Now, we obviously have tools to deal with it. It's not as much of a crippling aspect on the economy that we thought it would be back in March. So obviously things have changed. We could go low because of the fear, but again, I want to stress this: Bitcoin is here to stay for the long term, and buying at or below the 50-week moving average has always done well in the short term and in the long term. That's it for me. If you do want to sign up for Bitbuy, the safest exchange in Canada, go ahead and click on the link in the description below. Supports the channel, and you also get $20 when you deposit. If you like this content, go ahead and give me a like. I work really hard on making sure that you guys have quality videos on a daily basis, or as daily as I can. So if you do appreciate the content, definitely smash that like button. All right, everyone. Happy hodling.